Now, 60% of the people think that Bitcoin will not reach 300,000, so that's this line, at the end of 2026, end of next year. So 1.5 years from now, this is the 300,000 points. 60% of the people think we're not going to go there. In my opinion, we will. In fact, I think we go a little higher to the stock to flow target of 500,000 on average. 2013, we went 100x in the red dots. 2017, 10x. Last time, 2020, 2021, about 6 times. And now we're, 3 times up. And we're not there yet. The big question, of course, is why isn't price higher than it is right now with all the inflow in the ETFs and the Bitcoin treasury companies buying?
Despite months of sideways price action, institutional adoption of Bitcoin has never been stronger. As of August 2025, U.S. spot Bitcoin ETFs have collectively accumulated over 1.2 million Bitcoin, worth more than $66 billion at current prices. On top of that, MicroStrategy, the largest publicly traded Bitcoin treasury, now holds a staggering 628,000 Bitcoin, accounting for nearly 3% of Bitcoin's total supply. Meanwhile, Ethereum-focused treasury firms like BitMine have emerged, with $3 billion worth of Ethereum now on their books, making them the third largest crypto treasury in the world. This flood of institutional capital, via ETFs, public companies, and direct treasury strategies, should have been a game changer. Conventional wisdom says, when that much money enters a limited supply asset like Bitcoin, prices go up. And yet, they haven't. Not by much. So what's going on? Why is Bitcoin still lagging, despite the kind of demand we've never seen before? That's the mystery at the heart of today's video. We'll hear from 3 top experts: PlanB, creator of the stock-to-flow model; Tom Lee, co-founder of Fundstrat Global Advisors; and Jordi Visser, a macro strategist and crypto realist. Together, they'll help us unpack what's really happening beneath the surface of this market and what might come next for Bitcoin, Ethereum, and the digital asset space. As we bring you insightful analysis from these experts, please smash the like button, subscribe to the channel, and turn on post notifications for more videos. Crypto markets are moving again. Bitcoin's gaining momentum, altcoins are picking up, and a new bull cycle is quietly unfolding. If you're in Canada and you're looking for a reliable platform to get positioned, Kraken is the one I recommend. Kraken's been around since 2011. It's one of the most established names in crypto globally, and in Canada, it's fully optimized for local users. You can fund your account with Interact e-Transfer, credit or debit card, wire transfer, or even at a Canada Post branch, and you can start trading within minutes. The platform supports over 175 cryptocurrencies, providing access to major assets such as Bitcoin, Ethereum, and Solana, as well as smaller cap projects with significant upside potential. For people who are active in the space, Kraken also offers margin trading and a pro interface with tight spreads and deep liquidity. One of the standout features is staking. You can earn weekly rewards directly to your account, up to 12% APR, depending on the asset. Whether it's Ethereum, Polkadot, Cardano, or newer names like Bitensor TAO and Celestia, you can put your assets to work while holding long-term. Security and support also matter, especially in this industry. Kraken is fully compliant in Canada specifically and known for its strong security track record. If you ever need help, their support is available 24/7 by chat, email, or phone. It's simple, but it makes a big difference. If you're serious about building a position in crypto ahead of the next big move, Kraken Canada is a solid option. It's secure, fast to set up, and built to handle both beginners and more experienced traders. Please check out the links below to get started. Thanks, and enjoy the video.
Let's look at the cycles. It's an on-chain model. It shows you which cycle the market currently is, and it's still red. It's still in a bull market. All the on-chain indicators point to a bull market, and it's a strange bull market. It's a very long bull market and a very flat bull market. So normally a bull market is a year maybe a little bit less or more, but about a year, and now we're 1.5 years in already. So it's longer, but that's all okay. And it's also flatter, right? 2013 we went 100x in the red dots. 2017 10x. Last time 2020 2021 about 6 times, and now we're 3 times up, and we're not there yet. The big question, of course, is why isn't price higher than it is right now with all the inflow in the ETFs and the Bitcoin treasury companies buying? I don't know for sure, but what I hear around me is people, investors, rotating out of Bitcoin self-custody into ETFs and MicroStrategy. Maybe not with all their Bitcoins, but then at least with a big part of their Bitcoins, also to diversify a little bit. Many ways you can hold Bitcoin. And of course, I mean, that's what I did as well. I moved my Bitcoins to ETFs and Bitcoin treasury companies instead of self-custody. Anyway, still red, still bull market, still going up.
According to PlanB, the data is clear. We're still in a bull market, but this cycle is behaving differently. Price action has been unusually flat and extended compared to previous cycles. So what's holding it back? PlanB believes part of the answer lies in how capital is flowing. Rather than buying and holding on-chain, many investors are reallocating into ETFs and corporate treasuries, vehicles like MicroStrategy and Bitmine. These moves don't necessarily show up on traditional order books, but even deeper than that, something more technical may be happening. Bitcoin and XRP enthusiast Greg Acero recently offered an interesting insight in a tweet, which reads, "Even with strong ETF inflows and corporate adoption, much of this demand isn't translating to immediate price upside due to hedging strategies. Institutions often use delta-neutral trades, buying spot Bitcoin while shorting futures on CME, to lock in yields without creating net buying pressure. ETF purchases can also be internalized via platforms like Coinbase Prime, where coins move off-market without affecting public order books. The result? A black box of accumulation that hides real momentum. This explains why prices feel stuck despite record interest. The demand is there, but it's masked by institutional risk management, not retail-style price chasing." Up next, we turn to Tom Lee, who argues that despite the chop, macro conditions are quietly aligning for an explosive move later this year.
Well, last week was definitely consolidation because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup because now the Fed has more ammunition to make a dovish pivot in the fall. And it's not too late because we know the thing that they're going to stimulate is the housing market. And you had a couple guests earlier talking about that. And so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating and then we make a bigger move higher. I think the Fed needs to demonstrate independence. But you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
You have not thought that there is going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff-driven, it's been only mild. But also, if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now, and what time frame?
I think we're going to rally pretty strongly in August. So I think we can get back to 65 or get to 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
Bitmine, we mentioned that at the top, is going to be, in your view, the micro strategy or strategy of Ethereum or Ether.
Yes, that's right. Just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder, then.
Yeah, the largest ETH treasury in the world and the third largest crypto treasury in the world. And we also announced that Bill Miller III made a major investment last week into Bitmine, so that he joins Cathie Woods in investing in our company in the past couple weeks.
Tom Lee believes we're on the verge of a major breakout, not just in crypto, but across the entire market. He's calling for the S&P 500 to hit a new all-time high this August, fueled by a softening labor market and a likely dovish pivot from the Fed. If that happens, it could reignite risk appetite across the board, providing the spark Bitcoin and Ethereum need to finally break out of this consolidation. But for Jordi Visser, the story goes deeper. He sees a massive shift underway, driven not just by monetary policy, but by structural forces like AI adoption, stablecoin growth, and the rise of agentic systems, all of which he believes will funnel capital directly into Bitcoin, Ethereum, and the digital asset ecosystem.
This is really about acceptance and adoption, and there's still a lot of people that doubt it. I will tell you that I get more conversations with people in terms of reach out from traditional fiat investors. I think retail has been getting in gradually since the ETF launch. You've seen that with the inflows. But over the course of the last 6 weeks, there's been a dramatic shift, beginning with the Circle IPO. The Circle IPO, for me, was a major event. Tom Lee spoke in interviews and called it a ChatGPT moment, and I could not agree more in the fact that it just brought a lot more attention to the space. I do a weekly podcast really focused on the macro world combining with crypto, and I will tell you that I've had more reach out on Ethereum. And again, I've talked about this being the year of network effects for crypto. When I was on with you last time, we spent a lot of time talking about that. But I've been waiting for a period where AI would converge with crypto and with regulatory changes. And that's obviously what we've seen this year. And then last year was opening up more and more retail to it with the ETF products.
What do you think? Really buy a Bitcoin or buy shares of MicroStrategy or Strategy, or buy Ether, or buy Tom Lee's, the company where Tom Lee is a chairman of Bitmine. So is it better to get the cryptocurrency itself or buy shares of digital asset treasury companies?
I think it depends on the risk tolerance that people have. If they want more risk, they can go buy the treasury companies. I would stick with MicroStrategy in terms of Bitcoin. And I think since Tom Lee kind of has the first mover advantage in size in there, it's probably his route. But for people sitting at home that are getting involved, this is not a speculation to me. When this is exactly on the point of the public markets changing in the 2030s, I view the investment in first Bitcoin as being the S&P 500 of the future. I've said it repeatedly. I'll continue to say it. In a world where AI disrupts all businesses, every single business will be disrupted by artificial intelligence as we go forward. I just don't feel people have spent enough time on it. What Bitcoin represents is something which is outside the current system. It will continue to gain strength. I think on the last program, I said it would go above 200,000 this year. I still not only believe that, I think there's higher highs for it going forward. I think this is something that people at least need to focus on as a small portion of their portfolio, if for no other reason that I think from a standpoint of what is a certainty going forward, the current existence of the framework we have in capitalism is changing going forward. And if people don't believe it, they need to have some sort of a hedge. And Bitcoin and Ethereum themselves are at least combined a good way to do that. If they want to get in the treasury companies, they just have more risk, but I think they'll also work for the near term.
What is the number one question you're getting from what you called traditional fiat investors about crypto and potential investment ideas?
The number one question is, am I too late? So, which is an indication of people's fears of buying the top. So people are never going to put much money into it. I was on an interview earlier in the year with someone who hates it. And at the end of the interview, I just said to them, you will own it before the end of the year. You just won't tell anyone. This is part of the thing we saw in the polls for Donald Trump, is that he won the election going away. And that's because a lot of people that came out of the polls wouldn't admit they were voting for him, but they did. Bitcoin still fits in this situation where I think after 18 years or 17 years of continuing to move higher, being a $2.4 trillion asset, one of the largest assets in the world, it's getting harder and harder for people to be negative against it. So now the acceptance is starting. I think the adoption phase will come once the agentic world takes off. And that's the thing, Sherry, that I just want to make sure. I'm sure we'll be doing these again in the future. Every time I come on, you just ask me, how are we doing on the agentic world? As AI agents are transacting more, stable coins will be used more. That means people are entering into this world of the digital assets. Bitcoin will always gather a portion of that money that ends up there. And I think that's what we're headed for over the rest of this year.
When you connect the dots between PlanB's on-chain models and Tom Lee's macro outlook, the message becomes difficult to ignore. This may be one of the most quietly bullish setups in Bitcoin's history. PlanB's stock-to-flow model has long been controversial, but it's rooted in a simple principle: scarcity drives value. According to his latest projection, Bitcoin is still tracking within a bull cycle, just a very different one, longer, flatter, and more stealthy. But he's not backing down. Despite the chop, despite the skepticism, PlanB still sees Bitcoin reaching $300,000 by the end of 2026. And if the model plays out in full, his target stretches even higher, to $500,000 on average. That would be a 15x move from the 2022 lows. Tom Lee, meanwhile, is equally optimistic, but from a completely different angle. He's not relying on charts or cycle theory. He's looking at the real economy, at jobs data, inflation trends, and market momentum. And what he sees is a setup for massive upside. With inflation cooling and unemployment quietly ticking up, the Fed is under pressure to pivot. Lee believes we'll see rate cuts soon, and that could ignite the next phase of the bull run. In fact, he's already called for new all-time highs for the S&P 500 in August. If that happens, it could unleash a wave of liquidity and risk appetite across all asset classes, especially crypto. What's remarkable is how both of these analysts, one rooted in on-chain data, the other in macro fundamentals, are arriving at the same conclusion. The real rally hasn't even started yet. So as you watch the market move sideways and sentiment remain uncertain, ask yourself, is this consolidation or quiet preparation for something much bigger? If this video gave you clarity or conviction, like, subscribe, and drop a comment. Do you believe PlanB's $500,000 target is in play? Is Tom Lee right about a breakout around the corner? Or is this market still too fragile to call? Thanks for watching, and we'll see you in the next one.